and welcome to the next episode of Decode with Shyam Shekhar. 1 crore. Well, this number seems a lot to most of us, isn't it? And building 1 crore through mutual funds is never easy, I can tell you from personal experience. I have made a lot of mistakes in this process. Not stepping up SIPs on time is one. Letting go of wonderful market opportunities to do lump sum investments is another. I have also pulled out money now and then from my mutual fund portfolio and moved it to other asset classes, only to find that those gave me only half the returns that my portfolio was already giving. And I am sure that each and every one of you have your own individual experience to share in your path to 1 crore. Shyam is here with us today, as always, to dissect all of this for us and tell us why Milestones to Wealth can be an important part of your journey in building 1 crore through mutual funds. Hi, Shyam.
Hi. So 1 crore is a number that has a very important place in my life. 1 crore was a magic number when I started investing. And we had only a few thousand rupees to start with. By audaciously setting myself up for 1 crore, I started thinking how I can save those few thousands more every month.
Okay.
And how did I get this idea of setting a goal of 1 crore? A friend of mine who was a very, very aggressive equity investor told me, unless you think big, you will never be able to use equity to its fullest potential. You will be like a hobby investor just doing something when you have spare time and spare money. Most of the time you have spare money, but you don't have spare time. So the spare money just sits somewhere. Whereas when you have spare money and when you have a big goal, you will try to always do something with your spare money which will take you towards that big goal. Most of the time, investors who are very focused about reaching a big milestone are short of money. So my whole outlook turned and I started being short of capital with more ideas all the time. Finding money to invest in ideas became a challenge. And this was not big money. If you look at any investor's journey from starting to 1 crore, we would have saved mostly in thousands. Today, you have people who have the power of saving in lakhs. But most people have capacity to save only in thousands. How do you make these savings in units of thousands into some kind of a powertrain which propels your portfolio steadily towards a milestone of 1 crore? So when I did this in equity investing, I faced a lot of ups and downs because stocks are far more volatile. And your investment style has a bearing on this volatility. When I reached 1 crore, I had a lot of friends who came and told me, tell me how to do it. And I would tell them how I did it. But most of them were not able to replicate the same experience because they did not invest in small parcels regularly, always maintain discipline in how you are creating liquidity and deploying it. They would do it very rashly. When I started my professional work in mutual funds, the first thing that came back to my mind was my own experience in this journey to 1 crore. And I said, how can I do for others the same thing with a far better experience without that much volatility? And Milestones to Wealth was born out of years of thinking of how I can do the same thing using mutual funds itself. Because mutual funds generally have a higher capability to normalize risk. Because your choice is very wide. Today you have a vast repertoire of mutual funds in India. So you can always choose funds with lower volatility and still help people reach their milestone very comfortably. You don't need high beta funds to achieve higher compounding. All these things grew on me during my years of doing mutual fund advisory. So, Milestones to Wealth came to me as an idea at a time when I asked myself a very simple question: how can I take 1 lakh investors, very small, middle class people who can save in thousands, to 1 crore? How can I handhold them on this journey? How can I manage their volatility, their behavior, everything better, and give them an experience which gives them the confidence not just to reach 1 crore, but to think bigger? So that's how we coined this slogan for Milestones to Wealth, making every investor think big. There's a deep personal connect in this, but at the same time, I don't want investors to face the kind of volatility, the kind of swings in the portfolio, the kind of drawdowns, stuff which I experienced in my journey to grow. I'm very clear about them. So when we curated Milestones to Wealth, we wanted a scalable model where a lakh of investors can invest without high impact cost, without volatility, without drawdowns, without going through sleepless nights, without worrying about individual companies, and yet always focusing about how they can make the next small investment in the right place and keep adding to their portfolio at every opportunity. So this was a simple thing to do, but I was able to simplify it simply because I had worked years on this subject as an individual investor, as a professional, and I wanted the individual investor to get what I got as an individual investor, but without the volatility.
Understand. So, from what you say, it is all about small incremental steps. So, the 1 crore in Milestones to Wealth is broken down as 2 lakhs, 5 lakhs, 10 lakhs, and so on and so forth. So that, the 1 crore doesn't seem so big and seems easily achievable. Looking at that, do you think that the same steps or the same behavior that the investor shows is repeatable from a 2 lakh milestone right up to a 1 crore milestone? Or do you feel that there should be a change in behavior or a change in the way the investor approaches the 1 crore as he moves up the ladder?
I think investment success can do two things. One, it can improve behavior. Two, it can actually deteriorate behavior. I would like behavior to improve for every investor as they reach every milestone. If you see my own personal experience, I always demand of myself better behavior as I reach every bigger financial milestone in life. That's all I demand of myself. I don't demand higher returns. I don't demand that I sustain a very unreasonable rate of compounding. But I demand better behavior because behavior is the foundation on which you can build much bigger wealth. Without that foundation, you cannot do it. So, if you are saving, let us say 10,000 rupees a month, in 20 months, you would have saved 2 lakhs. And there would be returns that add to your 2 lakhs. At that point, you would have understood what this experience is over the 20-month period. You know how you experienced volatility of the market. You would have had a March 2026 in that period. You would have seen also a September 2024 in that period. You would have seen both sides. So you would understand both, and you would know how to emotionally deal with both situations. And you will know how to think beyond that and look at your savings and what you can do better there. That's where your behavior does a crossover from being highly return centric to being investment action oriented. You make that crossover by the time you reach 2 lakhs. At 2 lakhs, you start thinking, how can I reach 5 lakh faster? Chances are, over the 20-month period that you reach 2 lakhs, you would actually have reached a much higher sum because money would have made money. But more importantly, you would not have saved your full potential. You realize that you have a higher saving potential. So you will be ready to invest maybe 20,000 rupees instead of 10,000. Over the next 15 months, you would have saved another 3 lakhs and comfortably reached your milestone of 5 lakhs. But you would not have just 5 lakhs. You would have saved 5 lakhs, but your portfolio would be worth much more because you have spent 20 and 15, 35 months in all. But this 35-month period is like a master class which you have attended in improving your behavior, in showing confidence, in being a value contrarian, in continuing to stay invested. You know, most Indian investors don't stay invested for 35 months
True. Yeah.
in their SIP. So, in this 35 months, I would have taught them what the market has failed to teach crores of investors over this 33-year mutual fund journey of Indian mutual funds. We should have taught. And I'm only trying to teach 1 lakh people. In the process, I believe the behavior would have gone to the next level. Then they are ready to move from 5 lakh to 10 lakh. At that point, assume that they can save 25,000 rupees a month. Over the next 20 months, they would have saved the next 5 lakhs. So look at this. Over a period of 55 months, we would have taken an investor to a overall saving and investment of 10 lakhs without taking into account what returns they would have made. I have not spoken about returns at all. See, the entire mutual fund investing work ethic is oriented towards obsessing about past performance and making investment choices, and then being constantly aligned to that investment expectation, seeding disappointment, and then doing less. Sometimes stopping the investment, sometimes exiting. This is going on even now. This has been going on for the entire 33-year period that I have seen private mutual funds in India. I think it's time to move beyond that behavioral cycle. It's important to only focus upon your savings potential and your investment performance, how much you have invested, how much you have deployed, and then allow this 55-month period to judge what compounding has done for you.
So I absolutely get the point that you're saying, but at the end of the day, human beings have those fallacies. So, for example, as I said earlier, a lot of us are tempted. We do understand the benefit of compounding. We do understand that we have done so much savings, but at the end of it, we always get tempted to try and invest elsewhere or try to meet another goal using this. How do we continue that journey? I mean, have you seen in practice a lot of investors wanting to leave out halfway through? I'm sure it would have happened at the 25 lakh mark or a 50 lakh mark before you touch 1 crore.
I think the investors who leave are generally those who put cost of transaction above behavioral value, or those who are very deeply impacted by what they hear around them. For example, the kind of investments I make will not be the kind of investments that are spoken about outside. There would be investments that have been rubbished in media, in social media, in various places. But because they do that, it should not affect the rest of the people who are doing that. This is maybe 10 or 20% of the people. I think that the fact that the rest of the people are aligned should be seen as a very big positive. Usually, in my experience, only 10 or 20% of the people align to your investment thinking and philosophy. That's a big number actually. If I am going to talk about stocks in the public domain every day, I am going to find 80% of people disagreeing with me. Only 10 or 20 will agree, especially as a value contrarian. But when I am advising a mutual fund investor, what I have observed is that almost 80% of the people agree with what we are trying to make them do, and it's more or less 10 or 20% of people who don't stay the course. And this number is only going down because as the vintage or the age of the investor in the Milestones to Wealth ecosystem increases, I think their behavior automatically improves.
Okay.
All this happens during the first phase of investing of maybe 1 year or 18 months. And it's also a function of what is happening in the market around. There are people who redeemed in March, but a huge number of people contributed many times that redeemed amount. So I would look at the brighter side of it because we are working for people who want to improve their behavior, who want to get more out of their income, their savings, and their investment, and who want to have a good night's sleep with their portfolio doing its job. We don't want investors who want action. We can't satisfy people who have expectation of high momentum because it's never going to end well. So Milestones to Wealth is curated with a certain investor in mind, and it's meant for people who are high achievers in life, who are coming up in life, those who are the first graduates in their family, those who have started investing in equity as the first generation in their family, because I was one such person. So I can relate to all these things very well. And those who want to make financial freedom their topmost priority. So only when people are aligned to bigger goals and larger outcomes, they fit very well with Milestones to Wealth. Those who are doing it as a hobby and saying that, okay, Milestones to Wealth, another platform, I'm going to try it out, generally may not take it as seriously. But we are working for those who take financial freedom very seriously and those who want outcomes, who want to improve behavior, and who want a good experience along the way. I told you about 55 months.
Yeah.
That 55 months will set them up because they have done 3 of the goals out of the 6 goals. Because you have 3 more goals, which is 25 lakh, 50 lakh, and 1 crore. And most importantly, what I think is the critical strength of M2W, we do not talk about returns and still ensure that investors who show the right behavior experience good returns.
Understand.
So we don't show past performance to make any investor invest in any product. We tell the investor why the product is good for them for the future and why it is within their risk appetite and how it suits their risk profile and how they should meet their return expectations by showing better behavior whenever the market throws opportunities at them. So the focal point for them is aligned to what they want out of our relationship.
Understand. So this makes Milestones to Wealth actually a very unique program in the whole distribution ecosystem, isn't it? Because distributors draw a lot of flack for doing all the wrong things for investors, and a lot of investors hence say that they could build this wealth through direct platforms also.
I would say that it is entirely up to investors to choose the path they want. Now, I am curating this, putting all my energies and my commitment, time to deliver that experience to just 1 lakh people in the first phase. Now, there are crores of people who think that the direct option is the best thing for them. I have no argument with them. What I am giving is an experience. What direct option is giving is just a cost saving. I am not looking at costs. I am looking at outcomes. I am looking at behavior. I am looking at making a person much richer in his investment personality. These are things which I would think those savings can never create in a person. It is something which I believe a platform can never create in an investor because there is no effort in that direction. Whereas in what we are doing, there is constant effort, commitment, and focus, which is 100% pro investor and investor centric. That pro investor and investor centricity which we bring, in my opinion, is far more valuable than any cost savings that an investor may make. Undeniably, there are cost savings, but the value which we deliver will far outweigh the benefits of cost savings, and the investor will also not make investment mistakes, which may happen when he is on his own, influenced by whatever is the hottest theme, fund, and stuff like that. I'll give you a small example. We did not invest any capital in the hottest mutual fund of 2024. It turned out to be the coldest mutual fund in 2025. Now, the investors who came late in 2024 into this hottest mutual fund did not have a good experience in 2025. Now, compare that with the investor who came to M2W in 2024. He had a great investment experience in 2025 and continues to enjoy a far superior investment experience over his friends who chose the hottest mutual funds in 2024 on the direct platforms. So, this is something that we are very conscious about because we want investors to get the right experience that will improve their behavior, that will make them do more in their saving, investing, and make them stay longer with the right investments. So these are things which I would think are far more important than cost savings because the benefits far outweigh the costs.
Understand. Sham, so this milestone of 1 crore, for a lot of people, it may seem an ultimate milestone. But for some of them, they may just look at it as a stepping stone to other milestones. Now, would you have an advice for each of them individually on, a particular time frame within which they should ideally achieve it, or it doesn't matter? How do you look at it?
See, we are a society which makes a 40 crore goal go viral because it says it is not enough for you. I have clients who have 40 crore, which has been created from barely a few crores of saving over a period of 15, 20 years. And they don't know what to do with the money. That is their experience. Because by the time you reach 40 crore, your capability to spend shrinks considerably and you have more money and less to spend.
Yeah.
But for the person going towards 1 crore, what is the mindset? Let me share a personal note. When I reached 1 crore, I immediately said I want to go to 10 crores. Because I felt that 1 crore was not a great amount. When I reached 1 crore, I could buy an apartment in T Nagar, just second hand, for a total cost of 20 lakhs. That's all. Cars were selling at a price of 5 lakhs at that time. Good cars. So suddenly I realized that this is not too much money. Yeah, it's good. When I started with a few thousand rupees, it looked like a distant goal. But once you reach that place, my behavior is conditioned into thinking big. Without fear, I could think of reaching 10 crores after I reach 1 crore. So this first crore, for me personally, was a very big education. I would have made mistakes. I had drawdowns. We saw market crashes. We saw scams. We saw people showing very strong unwillingness to invest in equity as an asset class. We saw valuation of companies coming below book value. We saw dividend yield almost matching bank deposit rates and still people not willing to buy stocks. We saw so many things. So it was like going to a complete investment university, the journey to 1 crore. But by the time you kind of graduated, you've seen it all, and you know that you can weather tough times and you can think bigger. That is what I think every investor will get on Milestones2Wealth also, but with a much lesser uh, degree of volatility than what I experienced. It will be far lesser, but still behavior will keep improving because when we do things right, we get validation, we build confidence, our focus sharpens, our confidence makes us think of bigger numbers. All this will happen by the time a person comes to 1 crore. And I don't think any person can afford to stop at 1 crore, because in 1998, it didn't look like a big number to me. Today, if you want to buy a decent EV, you need 18 lakhs. So, what is 1 crore? Many people spend 1 crore on sending their children to university today. So, I think that 1 crore is a foundational number. It's more like a base camp for somebody who has to climb Everest. It's a good place to go, but you have a very steep climb from there. I think people will view it that way, but they will be ready for it. What M2W does is prepare people totally for that moment where they achieve something and say, yes, I'm happy. Now I need to go far higher.
Sham, yeah, I do understand that, 1 crore is just the foundation. But ideally, what is the time frame within which any investor should look at achieving 1 crore to move on further, as you said?
See, if somebody can save a lakh of rupees, it'll be very fast every month. And most young millennials can do this very easily. 12 lakhs a year, you do your math, right? In, barely 7.5, 8 years, they will be doing this very comfortably, right? But what about the persons who are starting on lower salaries, going higher? I would think that even such people will be able to achieve this in maybe 11, 12 years. And this is savings goal of 1 crore. So actually, they'll have much more money. So I don't worry too much about the timelines. It depends upon your life circumstances, where you are, how you get the next jump, and how you decide to change your saving and investment rates whenever you have every salary raise. And I think that this experience in M2W will make people want to do more. So that is something which makes them reach that 1 crore milestone sooner than they would have thought when they began the M2W journey. But for guys who are saving a lakh of rupees, it's a walk in the park actually. It's more like a very easy T20 match for them. But it prepares them for the bigger goal. Because every year, if you're doing 1 lakh per month and saving 12 lakhs, you would have saved even more, because your salary is also going to go up and you're going to actually save more than 1 lakh after a few years. So you are going to shrink this whole journey of saving 1 lakh. But however much you shrink, it will be 5, 6 years, not shorter than that. In 5, 6 years, your behavior has really changed foundationally. Your experience has taught you so many things, and you're actually hungry to do more. I think success also gives you much more confidence. But how you get that success to build that confidence is important. If you do something which is not replicable and get success and you get confidence, you tend to make a mistake. Here, we don't do things which are short-term oriented. We don't seek investments which are purely momentum and volatility led. So we are very careful in how we make the investor experience milestones to wealth. At the same time, the success has to come to them in milestones to wealth, and they should develop the confidence to do more. So it's a very, very carefully curated experience for investors, which brings them closer to their milestone sooner than they originally thought at the beginning of the journey. And it could be anywhere between 5, 6 years to 10, 12 years. But I would think that people always bring it closer from the 10, 12-year horizon to 5, 6 years. And remember, I have not taken returns into the equation at all. So returns will always bring them closer to their goals. And I am not going to lure people by putting a number saying that you will make this much money. We know how to do this. None of it. I would just make them focus on what they need to do and make them do it perfectly or to the best extent possible, as close to right as possible, so that when the market rewards, they will be receiving the first rewards from the market and they'll be well positioned to receive the rewards. So I think that that's the real thing about how people reach milestones faster and how people reach 1 crore faster. It's not about making people do things above their risk capacity away from their risk profile and experience the wrong kind of uh, investment outcomes. It's keeping them very close to what is comfortable for them, making them do more within their comfort zone and reaching the milestone.
That was an interesting conversation, isn't it? If you did have any doubts about our Milestones to Wealth program, I am sure that this conversation would have given you a lot of clarity. If you want to know more, please do write in our comment section. Thank you very much for listening in. Let's meet in the next episode of Decode.